It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, and welcome back to another episode of the Trading Stocks Made Easy podcast. I'm your lovable host. Why am I so formal? It's just you and me. Anyway, I'm glad that you're here today. We are recording in 2024 in the month of October. Why is that important? Because I have to ask you a question. What's your financial vision? What's your financial vision? Now, today, I'm going to talk to most of you who are already trading, selling covered calls, using the wealthy investor approach, and getting results. But you might not be earning as much money as you want to or as you are capable of. So, asking what your financial vision is, well, we know what the vision of the Wealthy Investor Program is: to get your account to $1 million or more so that you can live off of covered calls, volatility trades, and dividends to the tune of $25,000 to $50,000 a month. Now, whenever I go on somebody else's podcast, I do a radio show, people go, oh, that's impossible. But you and I know otherwise, right? That we can generate enough residual income so that we are living off of our investments. How do we do that? Quick review. It has to do with how we grow our assets in our account. So in the Wealthy Investor approach, at least 30% of your assets are in long-term dividend-paying stocks like Apple or Costco or something of that nature, right? Okay, what's left over? We know we're using a little bit of margin to grow the value of our account. In today's environment, margin is very, very expensive because interest rates are high. It's going to come down. Specifically, I'm referring to the use of margin. It's going to come down over time. Make sense? Because interest rates are also declining. So we don't have to worry about using our broker's money as long as we're aware of the environment we're in and how much it's actually costing us. Got it? Got it. Now, if you were trading strictly for income and not wealth building, you would use a different allocation, right? Maybe like 80% active trading, 20% in long-term investments. We could use our allocation and shift it according to our objective, all right? Now, that is in your cash account as I review the basic principles. In your retirement account, you know that you're only trading maybe 3 or 4 things for that income, usually selling 30-day cover calls to pull in larger premium. So our objective is clear, but what's your vision if you're not at $1 million in your account? How are you going to grow that money in your account if you're not in the right stocks or using the allocation? Well, here's this week's tip. Your allocation can change from quarter to quarter. We know that we are coming into a time of very high volatility in the fourth quarter. So what am I doing to generate maximum amount of profits without being greedy? You see, I already know the stocks for the quarter that I'm selling 30-day calls on, and the stocks that have high volatility this quarter where I'm selling 2-week out-of-the-money covered calls. Now, just a quick review. We know that call options are larger the further you go out in time because of something called extrinsic value. So if we're coming into the fourth quarter and call option premiums are higher, I am mixing the longer dated calls with that extrinsic value with the shorter dated calls where theta, which is time decay, is eating away at the options that I'm selling. I also know right now in this market what stocks perform well in the fourth quarter. In other words, annually, I always talk to you about a rotation that naturally goes on because of mutual funds into certain stocks and out of others. So if you really are comprehensively using the wealthy investor approach to the stock market, you should be adjusting in the fourth quarter to high vol stocks and stocks that go up at this time during a year because of the rotation. Do you see what I'm saying? Now, a lot of people go, Tyrone, this is a lot to remember. Actually, it is initially, right? But when you get in the habit of maximizing your account and exploiting the time of year, you should be fine. Okay? So your financial vision, I was recently talking to someone who is a single mom, and she is in the banking business. So she actually helps run a bank in her community. But she's not an investor, but she knows that something goes on at the board of directors level because she has to work with the board. And I'm keeping her name out of the discussion, obviously. And she knows that something goes on. Well, what do you think your local bank does? Well, during the fourth quarter, it is active in the stock market because the bank makes profits, what? Lending out money and then also investing that money. So most banks, although they're serving their local community, they are also making money on their money where? On Wall Street. They may not be trading in the bank's name. They may give money to a fund that handles trading for them and makes a commission. Now, the world of banking, investment banking, and stock market trading are three different worlds, but they all eventually shake hands together at some point. Now, you know how I'm always talking to you about getting a financial education? The more you know about the financial world, the more profits you're going to generate, and you trade a little bit differently because you understand what banks and institutions are doing on a seasonal or quarterly basis. That's why we get so many big block trades in the fourth quarter, because banks are taking profits or repositioning their portfolios. But the funny thing is, it's not only banks. Hedge funds are doing the exact same thing. Well, we need to pay attention to what they're buying and when they're buying and what they're rotating in and out of, right? Because essentially, you and I are trading right alongside of the big boys. Do you get that? Okay, so though after a while, it's not hard to trade in the stock market, but if you want to develop a certain degree of reliable expertise, you must understand these patterns. So right now, when I say, what's your vision? Your overall vision, your overall objective is to get to $1 million within a 5-year period, reinvesting your covered call profits and profiting from your dividends along the way, because they're for you, with the idea of reallocating at specific times during the year. I want to talk to you about that right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. Okay, we're talking about your financial vision specifically in the fourth quarter along with allocation. This is why I created WI Trade School, not to get you hooked on yet another subscription, but that you can go in and follow the video so I can show you where the rotation is going on constantly. That one subscription-based program does very well for almost everybody who participates because I can't tell you everything in a podcast. Sometimes I need to show you big block trades in the form of a video. So if you're a visual person, WI Trade School is for you. Cancel Netflix, keep WI Trade School. Actually, if you're making covered call profits in the stock market, you don't have to cancel each one. You can keep both because, well, the market is financing it for you. Okay, so traditionally, why do you, as I was saying to my friend in the banking business, how old is your son? My son is 3 years old. Cool. Why don't you start a stock market portfolio for them? Because they can hold stocks over the next 15 or 16 years that are dividend payers that presumably will be higher than where they are now. So she has a tremendous wealth building opportunity for her son. Why? Because he has time. And I said, well, tell me about your stock market portfolio. Do they allow you to have a portfolio at the bank? She says, yes. Great. Well, why don't you take some software stocks that are in the Dow mixed with a little AI and stocks that are consumer cyclical stocks, and why don't you just hold them? Because while you're holding them for the next 2 to 5 years, you are collecting dividends. She says, yes, but I really want to trade. Well, you can't trade until you've been holding stocks for about 6 months. Not that you can't physically trade, but you won't recognize patterns until you own shares for a little while. So what happened? In effect, I became her wealth coach for her and her son. Even though she's in the banking industry, that's very different. Managing people's money from the banking side is very different from actively trading with a plan. Now, as time moves on, I will ultimately say to her, hey, why don't you actively trade October through December and start generating higher call premiums and covered call income? She won't understand that now. She needs to build up just a few assets, notice a few patterns, collect some dividend checks, live off them, collect her son's dividend checks, and realize that this money is real and it's not a joke and it's not fake. Okay? So sometimes when you're trading and investing, not only are we looking at patterns, but experience is the best teacher. Okay? So in the fourth quarter, here's what we know. That mutual funds move their portfolios around. Why? Because they have a year-end statement that is due to the consumer within the next 6 weeks. That means the names that didn't do well on the year, they sell. The names that did do well, they bulk up on to dress up that portfolio. And in Wall Street, we sometimes call that window dressing. Dressing up the portfolio for their client, in this case, is the consumer. So when the consumer gets that statement at the end of the year, they recognize the major holdings in the fund. Now, a lot of people don't realize that that actually happens, but it really does. In fact, mutual funds dress up portfolios at the end of every quarter before they mail their clients the statement. Well, what does that do? That causes an awful lot of volatility, which then causes call premiums to actually rise, which means active traders like you and I make more money. Okay? All right. Fourth quarter is generally where you're going to see more activities, except this quarter is shaping up to be a little bit different. Now, I know this because I just finished trading 2.5 hours ago, that it's the November call options that are the juiciest, mid to late November. So if you have access to the option chain, check out the mid to late November call option chain on almost any stock that you like, and look at the power of those 30-day calls. They are very large. Now, you should know by now, every time you sell a covered call, it lowers your cost basis on the stock, right? So if I can get $7 or $8 6 weeks out, and the call is also $1 or $2 out of the money, I've set myself up to win from a trading perspective in the short term because I get the larger premium. But if I'm called out, I have a very nice cap gain. Get that? And this is the other part of the trade I always remind you. You need 100 shares in order to sell a covered call. So in this market, why not buy 625 shares, 640 shares? Why? Because if the stock races forward, you are participating in that growth of the stock because you can't sell covered calls on 25, 40, or 45 shares. They have to be in lots of 100. That's how I know how to generate substantial trading profits in the fourth quarter, because I'm looking at the big block trades, the longer call options, and I know to instinctively keep some shares free and clear. Now, the same thing, the same structure is applicable in my retirement account. And if I'm also trading in my kids' retirement account or my partner's or wife's retirement account, I'm exploiting the same system over and over and over again. You see, when you study with me, you have a lot to look forward to and a lot to be excited about because seasonal trends are part of the Wealthy Investor Program. You should never be in the stock market alone, winging things on your own. Why? Because greed will always kick in. And greed will have you choosing stocks that are way too risky and that are outside of the Dow Jones Industrial Average in the S&P 500. So, as we conclude this particular episode, what is your vision? How are you going to use the November out of the money calls to your advantage when this week, today, right now, when you look at your portfolio? Do not run up your margin here. We've got to wait for the Fed to lower interest rates. So try to keep an eye on that, because if you don't, you're going to wind up paying too much in margin interest to put certain trades on. And this is a question that comes up all the time. Tyrone, should I be using margin for my investing stocks? Wait, you're going to borrow somebody else's money to buy more stocks that you don't intend on selling into another 2 to 5 years? No. Margin is for short-term trades. Remember that and use that bit of advice to your advantage. Okay, that's going to do it on this particular episode of Trading Stocks Made Easy. What is your vision? Have a vision, have a plan as to how you'd like to trade between now and Christmas Day. And you may notice something very interesting. Your profits are more skillfully calculated and they increase. I'm Tyrone Jackson saying I'll see you 24/7 at thewealthyinvestor.net. Until next time, later.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.